Hey, what's going on, everybody? My name is Rob. We got a little channel in business called Feedbackwrench. I help entrepreneurs, small businesses. Before this, I had an accounting firm. I help accountants. If you need a website, you need digital marketing, let us know. And then I want to help empower entrepreneurs, right? I want to create more entrepreneurs. If you are a driver for Uber or Lyft and you want to maximize your taxes, I want to help you out. I'm telling you, there's two things that you can do that can just absolutely devastate. Say, hey, hi. It's my second. I got 4 kids, dude. But if you make 1099 income as a Lyft driver or an Uber driver and you want to save in taxes, boy, I am going to show you 2 massive ways to move the needle. And I'm not talking like, oh, you're going to find more write-offs or anything like that. First of all, your car, holy cow, can your car be a write-off machine? If you're interested in learning how to make your car an absolute tax-guzzling write-off, then you need to go in and you need to look at Sandy Botkin's book called Save Taxes. Sandy Botkin. He has a guide in there on how to reduce or use your vehicle as a tax reduction machine. And just long story short, if you line up to buy the proper vehicle while you're doing this Uber stuff, you're gonna be able to deduct a ton more against your income. Okay, and this is all about Uber drivers, Lyft drivers paying their fair share in taxes and not a penny more, right? But I'm going to show you 2 things that are going to move the needle so doggone much in your taxes that it could potentially put tens of thousands of dollars back into your pocket, okay? And I mean it. This is no puff you up anything, and it's easy. You can do this, okay? So I'm going to move fast because I'm actually running out of battery on this little GoPro right now. There's 2 things. The first thing is you need to look at what business entity you are. Now, when you first come out and you first start making 1099 income, you're taxed as a sole proprietor. You can either be taxed as a sole proprietor or you can be taxed as an S Corp. Sole proprietor, S Corp. Sole proprietor, S Corp. A lot of times we'll call this an LLC and an S Corporation, subchapter S, okay? But essentially what happens is, out of the box, you have your gross income that you make, all the income against all of your deductions, right? Your mileage, all the messing around, excuse me, that's the coffee. All of the messing around that you have. And then you have your net profits. You're going to take that net profit, and as a sole prop, you would pay 15.3%, which is your self-employment taxes. Okay, your self-employment taxes are Medicare and Social Security taxes. Okay, 15.3%, up to $125,000, which is the Social Security limit, and then after that, it would only be 2.8% in your Medicare taxes. Okay, so the first thing is net profit. You have your gross, deductions, net profit. 15.3%, that's a huge tax. Then you're gonna pay state and federal taxes, okay? And when you have more kids, you get more deductions, right? You're a homeowner, you get your mortgage interest, yada, yada, yada. Or, here's where the big thing is. You can become an S Corp, okay? And when you file to become a corporation or a subchapter S or an S Corp as an Uber or Lyft driver, you do the same thing. You get your gross, deductions, you're left with the net profit. You have that net profit, and then you get to cut your income into 2 parts. You actually pay, your corporation pays you a salary, and then you have what's called an owner's distribution. Salary, owner's distribution, dividend. There's a couple, people call it all sorts of stuff. It's kind of weird. But you have your payroll or your salary that your corporation actually pays you, and then you have, as the owner, you have this dividend. Here's the thing. The payroll is subject to the self-employment taxes, but the dividend is not. So now you have to pay yourself a payroll that's reasonable, okay? So if you were making, let's just say you made $60,000 in net profits, right? You might give yourself a $30,000 salary, and then you pay yourself a $30,000 dividend. That $30,000, you will pay 15.3% on that, but not on the distribution. That just put like what, $4,000 back into your pocket. Yeah, I just saved you $3,000, $4,000, even if you're only making $60K. Now here's the catch: when you become an S Corp, oh, I gotta run away. She's gonna make a ton of noise. I gotta go save my little one here. But when you become an S Corporation, here's the deal: you gotta have a payroll system. Click the link in my bio here to QuickBooks. Intuit makes a sweet system where they give you can get your bookkeeping system, which you'll want to have, plus payroll, and they'll actually do your payroll. I think I'm all in at $90 a month. So you will have some more bureaucracy and some costs going on, but that's huge. Become an S Corp if you're making net profits north of about $50,000. You will save a ton of money. And then you can just use the link for QuickBooks and have them run your payroll. You have to run your own payroll and pay yourself. And then tied to that payroll, you have 940s and 941s. They have a full service option in there. Look into that. Tell them you want to do that. And use our link so we can get a little commission. Here's the second thing. Now this one I don't make any money on. Look into having one of two things, either a SEP IRA or a individual 401k. SEP IRA, there's SEPs and simple IRAs, and then there's individual 401ks or solo 401ks. Go to Vanguard.com, okay? And I'm telling you, use one of those two tools and you can do what's called an employer contribution. Whenever you do retirement plans, you can use your income, and it's the most tax efficient investing you could possibly do. You have it an advantage that no employee of a corporation would ever have. You have a better retirement gig in a way than people that work for big corporations. This is what people, when you're a 1099 income earner for Lyft or Uber, for anybody really, you have more tax planning opportunities than anybody else. And then you have your car, which can be an absolute gold mine. But here's the deal. You can put between 0 and 25% of either your net profit as a sole proprietor or 0 to 25% of your payroll as an S Corp. You can make that as a profit share contribution into a retirement account. And then basically it's a write-off directly within the business. So what that means is whatever between the 0 and 25%, so if you made $100,000, you could do up to $25,000. That's a direct write-off. You essentially don't pay that self-employment tax on it. So what's really cool is that's just the most tax efficient contribution you can make, A. B, on the SEP IRA, all you can do is between 0 and 25%. On the individual K, you have two things you can do. You have your regular 401k contribution, just like if you worked somewhere else, and then you have the employer contribution. You can do up to $52,000. You can do up to $18,000 in Roth if you wanted to. Now that's not a deduction, but I'm telling you, call Vanguard.com. You go to Schwab, I like Vanguard, and Fidelity. They probably have the best small business stuff, but Vanguard.com's individual 401k, she wants to go home, you guys, is such a sweet deal. Look into, you do those two things, guys, you're gonna save a ton in taxes. Like and share this video. Tell every Uber and Lyft driver this is how you save a ton in taxes. Good luck. Hope everything works well for you.